Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hi all, welcome to Business Line's State of the Economy podcast on commodities. We will be looking at copper in this episode. Copper prices have dropped by over 20% since rising to a record $11,464 a ton on May 20 this year. Currently, the prices are at a 5-month low. The delay in the interest rates cut by the US Fed and a slack Chinese economy have led to this fall in copper prices. Expectations of the market hoping for stimulus measures from China have been black. This has compounded the situation. How will copper behave in the coming months? What are the factors to watch out for? To tell us about these and more, we have with us Mr. Kishore Narne, Director and Head, Commodity and Currency, Motilal Oswal Commodity Broker Private Limited. Welcome to Business Line's State of the Economy podcast on commodities, sir. Sir, what's happening with regard to copper? Because it went up to a record high in May, and after that it's come down. There's a bit of volatility. So what's really happening with copper and where is it headed?
I think, copper market has seen this volatility because of two major reasons I can see. Number one is that in commodity markets, especially China plays an extraordinary role because nearly 50% of copper which is produced is consumed within China. So that actually makes them as a key factor for prices. So initially, when we started this year, as we anticipated that China has been going through the economic crisis, especially their housing market has been struggling. So there was an anticipation in the market that they will come up with kind of reform measures or stimulus package, probably to revive this housing sector and some of the banking sector, which they is trying to avoid a big NPAs and all. So in anticipation of that, the copper has started to rally, that there will be a massive rate cuts, there could be a massive stimulus coming up. So that actually built up. And also there was an anticipation in the market that US Fed will cut the rates, economic boost activity coming up from China, and a rate cut possibility from US. Both has actually led to this rally. But unfortunately, both have been disappointed the markets. So Fed has not actually cut so far, and the US inflation numbers have been on the rise. Except the recent fall, they have been on the rise actually, which has led to these expectations to get toned down. And after the Communist Party of China's plenary meeting, there was no big announcements coming up, especially on the property sector, and that has been a big disappointment. There has been a 25 basis point RRR cut by the PBOC, but actually that didn't really matter. So after these expectations have been toned down, the markets came down significantly for that matter. There was a rally in dollar because the US didn't cut the rates, and the rate cut expectations came down from 3 rate cuts in 2024 to maybe 2 rate cuts and maybe 1 rate cut. So this altered expectations of the markets from the central bank rate cut cycle has actually disappointing, and then the prices of commodities including copper have come down significantly. So this is the entire reason for going up and going down. Both have not a big contribution from the fundamentals of copper, but it's a largely macroeconomic factors have been behind this volatility.
So going forward, how are the prices likely to behave in the coming months? And why is it likely to behave that way?
I think going forward, a few of the factors which will again decide the price movement from here is definitely the US, the Federal Reserve's outlook of the economy and how they're going to see that. At this point of time, the market is discounting that a soft landing in US And after the recent economic numbers from the US actually suggesting that the inflation has cooled down and unemployment has started to climb, so the Fed rate cut has become more and more realistic. So September is an anticipation from the market that there will be first rate cut in the September meet and probably one more rate cut before December. So in that scenario, commodities should recover, but we don't anticipate any big sustainable economic recovery in China. So that will be a laggard and which could drag down the prices or which could actually keep the prices capped. Uh, One more thing is the TCRC ratings, which is the conversion cost or the smelting cost of copper has been at a record low. So though at this point of time, copper smelters are maintaining a strong output, but I don't think that will be able to be continued because most of the smelters have been loss making in the recent times. So at some point of time, they will start cutting down on their output, so create um, which will create a negative factor for copper. And because there is no end consumption, but still the output has been going on for some time, the inventories also have been building up. So LME inventories, if you see, has doubled since the beginning of this year. So that is actually showing that the end consumer demand is not happening. So that also will be a big factor which will be weighing on the price. So we are not seeing any major change in the price outlook at this point of time. So it should be uh, going hardly from here. Uh, but downside could be restricted. So we are seeing only maybe 3 to 4% downside. But for the prices to climb up significantly, anything above 5% from here, they need triggers. At this point of time, we don't have triggers. So rate cut from the Fed could be a trigger. Once that happens, the commodity markets will be started to repricing the dollar. And post September, we see commodity rally, especially the rally in copper to resume. But till that time, it should be a range bound market.
Sir, any other factor that an investor needs to watch out for in the copper market?
So I think largely most of the factors which we have already discussed are going to be the immediate factors. Second is the anticipation of recession in US. So how deeper the recession could go also could impact the markets. At this point of time, the jobs data is showing a slight increase in unemployment numbers. But still, most of the numbers, most of the economists across the world are anticipating a soft landing for US. If that actually changes, and if the US economy crashes much faster than what is being anticipated at this point of time, that could actually cause a significant downside in commodities, which could be altering this perception or this outlook, which I'm saying that most of the downside has been priced in. But for the upside triggers, you need some kind of improvement in China. If the Chinese economy doesn't improve, there is a remote possibility that we'll see any major rally in commodity prices, especially in the non-ferrous metal segment. So, if the global recession coincides with slowdown in China, that will actually pull down copper significantly from even here, even at these levels also. So, in our outlook, we are looking at a possible soft landing of China, so a possible soft landing of US, and the worst is behind us in China. So if there is any change to that, that would actually impact at this point of time. But otherwise, we are looking for a range bound market till September end. And probably if we see a first rate cut from Fed, then we'll see some rally coming up in the last quarter of 2024.
Sir, there were recent reports that, there are some Chinese government agencies, some of them are shifting from copper to aluminum, particularly on the infrastructure side. I think that is also going to sort of have some impact, or, how do you view that development?
The copper to aluminum, the use case scenarios are very, very less actually. You can't really replace copper and aluminum because there's two having very different different use case scenarios, because one is a one has thermal properties, the other is more transmitting properties. So copper is more thermal, and it's used in household wiring or household cables. And aluminum is into mostly into high tension, high voltage power lines. So these are not really replaceable to each other in very few scenarios, and especially in the thermal, like air conditioners and home appliances, you can't really replace these two. So uh, the only thing is that on the smelting capacity, already we have an excess smelting capacity of copper. And as I already mentioned, that the TCRC is not very attractive. The TCRC has come down significantly. It's close to the lowest in the recent times. So some of the smelters are already started to bleed, and probably they'll not be able to continue. And eventually, we expect them to shut down if this kind of prices doesn't maintain from here onwards.
What will be the impact on the consumption in the Indian markets or the key Indian sectors like infrastructure or construction?
See, India is not a big price maker. It's always a price taker. So we don't really decide the prices of most of these metals, because most of them are imported, are decided globally. So we are a price taker. So we don't really impact the prices, number one. Number two, on the demand front, yes, we will continue to be consuming these metals. But I think we will be looking at cheaper solutions like the scrap market. Though our infrastructure is going to continue for next decade or so, we are going to build a strong infrastructure network. So we will continue to be the consumer, but we are nowhere near to what China consumes. So China consumes roughly around 13.5 million tons of copper, which we are not even close to that. The second is the sector which both aluminum as well as copper is slightly placeable, but at the same time also used is the automobile industry, where especially the EVs and EV batteries are going to be a critical use, where some of these metals will be useful. Uh, but the aluminum and copper are not really very fungible at this point of time, and does not see any change there. So on the infrastructure side, it is more on the ferrous metals like iron and steel, but not copper and aluminum. So copper is more household appliances and thermal installations and housing market. So typically, if the economy does better, copper does better on a macro scale. So the retail sales as well as the domestic consumption story remains perfectly aligned with the growth of Indian economy. So we will continue to consume, but the price impact in the global markets, I don't think India has at this point of time even the power to decide those. We are not that such a big consumer in the global markets.
Thank you very much for insightful views, sir. Thank you for listening in, viewers.